So welcome, everybody. We have a good topic today, one that several people have asked us to please help them with. And we have John Maurer here to help us through this. We're going to be having several of us monitoring the chat feature, which is the feature down there in the lower right corner. It looks like writing. You can type in your chats there. John, my working assumption right now is that you will not be monitoring the written chats. You'll just be talking, so we can jump in if we see something on the written stuff, right?
That sounds great.
Okay. So we're just going to take off. We are recording this. We are going to post it out on MedicarePlanDetails.com that you can get into, and you can view the recording. So if you want to do it, for example, last week we had Aetna on, and they were going through some of the rather complicated details of using their wellness, the 1200 wellness. And I had several agents who say, I want to watch that a couple of times. So that's out there. This is going to be out there. That's going to be it's going to be a resource for you to go to, and we can put stuff out there if you'd like us to research it and put it out there so that you don't have to, go scrambling for it. Anyway, John, take it away.
All right, thanks, Doug.
Sorry, John, can I interrupt real fast?
Yeah, sure. Go ahead.
At the end of this, I'm going to be sending out the CE questions. So please let me know if you don't receive them, but I will be double checking to make sure that I get them out to everybody who was on the call. So thank you.
Thanks, Morgan. All right, everybody should be able to see my computer screen, correct? Where it says Work Comp for Employers.
Yes.
All right. So
all I see is your face. Do I need to go somewhere else?
That's optional to see me, but
Gene, are you on your phone?
Yes.
It could be that, if you turn it sideways, you may be able to see it. You'd have more real estate.
Yeah, all I see is the group of people. Maybe I need to be on a different page or something.
There's an option in there. I'll see if I can figure that out, and I'll send you a text message.
Okay.
All right, thanks. Anything else before we get started? All right, appreciate you all being here. My name is John Maurer. I'm one of the owners of Mountain CE. My wife, Marlene, is the other owner. And so we've been doing this since 2005, so about 19 years now. And so we do insurance continuing education as well as exam prep. And so the name of this course is called Work Comp for Employers. So it's a high-level overview of workers' compensation, but there's an emphasis on employers because a lot of you, or maybe all of you, are a small business owner. And so it's important to know, as business owners, what are the laws, what's the rules in Utah as far as workers' compensation? Do we have to be covered by work comp? And if so, how do we get work comp insurance, and what does it cover, and how does it work? So this is we're going to end at it's a 2-hour, you get 2 hours of CE credit, and specifically for Utah resident producers. So if you are a resident of another state, we don't have this course approved for other states, but only for Utah residents for the CE. So we have it blocked off from 12 o'clock. So the question is, do you want to halfway through, do you want to have a little halftime break, like maybe 2-minute break or 10-minute break? And I'll let you all vote on that. What would you prefer? Just keep going without any break at all, or a short break, like 2 or 3 minutes, or 10-minute break? What would you like?
You can jump in, or you can enter it into the chat feature.
Let's go through it.
I agree.
Debbie, go ahead and talk.
I agree. Let's just go through it.
Okay. All right. If you need to step away for 2 minutes, that's okay. But don't be gone too much longer, because otherwise you might miss some very important information and might not be able to get the CE credit.
Oh,
All right.
We
So
we will have it recorded. So
okay. Very good. So again, this is work comp for employers, 2 C credits for Utah resident producers. So I'm going to go through first what we're going to be talking about. Here's the agenda. We'll talk first about the importance and purpose of workers' compensation insurance, a little background, and some important concepts or legal doctrines that we should be aware of with workers' compensation. One being the idea of absolute liability. What does that mean? How does that relate to work comp, and also exclusive remedy? We'll go
Hey,
through.
John.
Yeah, go ahead.
John, I don't mean to interrupt. Debbie
Go for it.
Gustafson raised her hand.
Okay.
So Debbie, do you have a question?
No, I don't. I apologize. It was an accident.
That's okay. Not a problem. All right. So we'll go through some state laws, like what do you mean by compulsory laws, what are elective laws, competitive versus monopolistic, and we'll talk about what Utah is related to that. We'll talk about which workers are covered by workers' compensation in Utah, which ones aren't, and we'll get into things like, well, what about self-employed, self-insured, or can an employer self-insure? We'll talk a little bit about that. We'll talk about WCF, which used to be called Workers' Compensation Fund of Utah, and who must purchase work comp. You know, if you're a small business owner, do you have to get it or not? And how to get coverage for a small business owner, and something called the waiver, the coverage waiver for contract workers as well. Also, another important thing is we'll talk about what does work comp cover and what it doesn't cover. And then the final thing on the agenda today is the different parts of a work comp policy. And one of the things that we'll talk about there is how is the premium calculated on a work comp policy. All right, that's the agenda for today. So now we're going to focus in on the importance and purpose of work comp, the background, what is absolute liability, what is exclusive remedy, and also in here we'll talk about compulsory versus elective laws and competitive versus monopolistic laws. All right, so I'm going to go into another program here. It'll be up here in just a moment. All right, so you should be able to see that. We're going to go into this here, and I'll click make it a little bit bigger so we can see it better. All right. All right, so everybody should see where it says before workers' compensation. So this is just a little history. I think it's interesting, kind of like how workers' compensation evolved. And workers' compensation is kind of a relatively new thing in the United States. It started in the early 1910s. Like I think the first work comp policy sold was 1911 or something, just when I was just a young boy, about 1911. And every town is good for something, and the town that I was born in has its claim to fame is that it's the birthplace of workers' compensation in America. Who cares, I guess? But the town I was born in, Wausau, Wisconsin, is where the first work comp policy was, insurance policy was sold in America. But that brings up a point of, in the Midwest, Wisconsin and neighboring states, there's a lot of German immigrants that came over, and they had workers' compensation in Germany, and they brought that idea with them to the Midwest. And so that's where kind of work comp got started in the Midwest. There's lots of factories. There was lots of lumbering, cutting down trees and sawmills, and lots of people getting hurt in the factories and the sawmills and cutting down trees. And so it was kind of a natural fit that's where workers' compensation started. And so, before work comp, it wasn't a good situation because there's lots of people that would get hurt, and employers would say too bad, too sad, who's next? Who next wants, there's lots of immigrants coming in from other countries and people looking for jobs and desperate for jobs in some situations. And so workers were kind of thought to be expendable. And the idea is that back then is that if an employee got hurt, they could sue their employer, but the big companies, the big factories, the big companies had the legal resources to defend these lawsuits. So a lot of people getting hurt and people not getting taken care of. But then work comp, kind of started changing that in the 1911 timeframe, and it wasn't too long after 1911 that most states in the U.S. at that time did have workers' compensation laws. So, today we say that workers' compensation, there's absolute liability. So, what does that mean? Absolute liability. Absolute liability, another name for it is strict liability, means that somebody could be held responsible for somebody else's injury or damage, even if that person or company didn't do anything wrong. It's kind of like the idea that, somebody breaks into your house and gets hurt and sues you, right? And, those types of things have happened, where a burglar breaks in, they're able to successfully sue the homeowner for getting hurt. That's the idea of absolute liability. Even though, the homeowner didn't do anything wrong, somebody could still hold them responsible. And that's the way it is with workers' compensation insurance. Work comp, under work comp laws, it's absolute liability, means the employer is responsible, even if the employer doesn't do anything wrong, right? So, if I get hurt in a factory, maybe it was my fault, maybe it wasn't my fault, doesn't matter. Maybe the employer could have done something better, maybe not. It doesn't make any difference. The employer created the situation and is held responsible for my injury, even if the employer didn't do anything wrong. So that's an important thing to remember about work comp. Employers have absolute liability in the situation and therefore are required to have workers' compensation insurance to take care of injured workers. Another important thing about work comp is that it is considered the exclusive remedy. Another fancy schmancy legal doctrine, which just means that that's what we have in our society to take care of injured workers. And if an employee gets hurt, the workers' compensation should take care of that employee's benefits, like loss of wages, medical bills, rehabilitation, and so on. And in exchange for that, in exchange for people getting taken care of by work comp, that employee is unable to sue their employer. That's kind of the trade-off. That's the exchange. In exchange for people getting taken care of by work comp, they cannot sue their employer. And that's kind of the way it is. Can an employer get sued? Yeah, it's possible, but usually not the case. All right, I'll pause there a moment in case you got any questions or concerns about that. No questions at this time? Okay, now another thing that we should be aware of is that some states are considered to be have compulsory laws. Some, well, one that I know of, and that state being Texas, has elective laws. But Utah and as far as I know, nearly all the other states have compulsory laws, which just means that we employers must, it's state law, there are some exceptions, but state law says that employers have to have work comp insurance for their employees. So Utah is considered a compulsory law state. Some states have a competitive market for work comp insurance, and some states are monopolistic. Utah is considered to be competitive, which means what? Means that an employer can buy work comp insurance from any insurance company that sells it. There's many companies that sell work comp in Utah, and the carriers get to compete for the work comp insurance business. It's a competitive state, Utah is. And there's about four or five states that are monopolistic. And if I remember correctly, they are Washington State, Wyoming, Ohio, and North Dakota, I think. So most states, though, are competitive.
John, can you hear me?
Yep, sure can. Go ahead.
Yeah, I was just going to point out, as far as I know, Utah is, because it's compulsory, you can get workman's comp from any of the places that you were just talking about, but Workman's Compensation Fund of Utah is the default. So if you don't get it somewhere else, you're going to automatically fall into that bucket.
Yep, you're absolutely 100% correct. And the fancy way of saying that is insurer of last resort. So yeah, WCF provides the insurance of last resort. We say if an employer is maybe brand new and doesn't have any history, and so a lot of uncertainty with in underwriting, then yeah, they can get it from WCF. Or if an employer has had a really horrible experience, so loss history, lots of workers have gotten hurt for that type of business compared to other similar employers, then yeah, WCF is the default, as you said. All right. So that's a little bit about the history and some legal aspects of workers' compensation. And now I'm going to go back over to here and just reiterate an important thing. Because you're going to be getting tested on some important things. That's how Stonehill keeps track of who is in class and who isn't in class by answering the question. So you never know what's going to be on one of those questions. So here's a question for you all to think about. So workers' compensation is considered to be the exclusive remedy for employee work-related injury or illness. What does that mean? So I'd like you to, you can answer just 1, 2, 3, or 4 in the chat. Number 1 says workers' compensation pays only if the employer is not negligent for the injury or illness. Workers' compensation pays only if the employer is negligent for the injury or illness. Number 3, the employee can sue the employer, and if the suit is successful, then work comp will pay. And the last one says workers' compensation pays benefits defined by state law to the employee, and in exchange for that, the employee is generally unable to sue the employer. So which one do you think it is? 1, 2, 3, or 4? You can answer in the meeting chat. And I can...
everyone in the chat has said 4.
Yep. So good job. Everybody was paying attention. Yep. So the answer, of course, is number 4. That's a very important thing about knowing some fundamentals, things about workers' comp. That's the thing that we have in our society to take care of injured workers. And in exchange for that, the employee can't sue the employer. All right. Very good. All right. So we already talked about the compulsory laws and elective laws. And so now we're going to talk about things like which workers are covered. We can talk a little bit about self-insured employers. The WCF will go into a little bit more details on that. Who much purchase work comps, coverage for small business owners, coverage waiver for contract workers as well. Okay, now I'm going to bring up a resource. Just looking at the time, we're right on time. So we're doing good on the time. All right, I'm going to bring up a document that's available on the Utah Department of Labor website. That's a really handy tool for employers. It's called the Employer's Guide to Workers' Compensation. I'll bring it up here in just a moment. Oops. Oh, there it is. It said it wasn't available, but now it is. All right, so does everyone see that? It says Employer's Guide to Workers' Compensation.
Yes.
All right. So it's easy to find. You could just, Google Utah DOL, stands for Department of Labor, workers' compensation or employers guide to workers, something like that, you'll be able to easily find this website. And it has lots of good rules, important rules to know about, laws. And we'll come back to this in just a moment, but there's also this resource here called the Employer's Guide to Workers' Compensation, which is a PDF version of important things to know. So I'm going to find that and pop that up here. Employer's Guide to Work Comp. Here it is. And I'll make it bigger so we can see it. All right. Oops, so it's too big. All right, so we're not going to go over the entire document. I'm not going to, blah, 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 read it all to you, but I'm just going to point out some important things that I think would be applicable for you. So we already talked about this, that the fact that, work comp is considered to be the exclusive remedy, and that's mentioned in state law. And it says right here, injured worker gets benefits, but the injured worker cannot sue their employers or coworkers in court for damages. So it takes out all of the legal hassle of having to hire an attorney, and attorneys are do a great job in our society. It just helps, though. In this situation, we don't have to hire an attorney to sue an employer. Because our system automatically takes care of injured workers.
John, we
Okay.
have a raised hand here. Sid,
Go ahead. Yeah, go ahead. Oops, I pushed the wrong button. Hang on. Was there a question?
John, I would like to point something out. If you scroll back up to where you were a second ago,
Yeah.
there's an important little thing in that part A
Yeah.
answer, and it's talking about the benefit. So there is a predefined benefit amount for the different types of injuries. So if you lose one eye, it's a certain amount. If you lose two eyes, it's a certain amount. If you lose a leg, so on and so forth.
Mhm. Okay.
So it's all predefined how much
Yeah,
it pays.
excellent point. Absolutely, 100% correct. So if you look into a workers' compensation policy, if you have one, if you look at that policy, you'll notice that it's very, very short. It's not a very long policy. Unlike if you look at your auto insurance policy or homeowner's policy or other type of insurance policy, it's going to have health insurance policies as well, like disability policies. It's going to have a lot of details about like what's covered, what's excluded, and yada, yada, yada. But in a work comp policy, it's very short because it just pretty much says this policy covers what state law says is covered. So yeah, absolutely good point. State law dictates what the policy will cover and what it doesn't cover, how much it covers, and so forth.
John? I just lost my connection line coming back, so you may have taken care of this. Have you seen John Sid Haycock is raising his hand?
Okay, go ahead, John. Oops.
Yeah, I don't have a screen.
Let's see.
You don't have a screen, John?
Well, I'm not sure what I should have. I mean, I can see John in the little square, but I don't have anything else on my screen.
Okay,
Am I supposed to have? That might be the question.
Yes, you are supposed to have. Just tell me real quickly, and then I'll communicate with you offline. Are you looking on a Windows machine? What kind of machine are you using? Your phone?
No, I'm on my PC.
Okay,
Windows 10.
I will. Could you just make sure that I have your telephone number? What's your telephone number, John?
801 916-1900.
Okay, I'll send you some information.
Okay, thank you.
All right, thanks.
Thanks, John.
Thank you. All right, any questions or comments so far about what is work comp and how does work comp system benefit employers, and not having this employee doesn't have to sue their employer? You know, that's also kind of an awkward thing, wouldn't you say? Like, you know, if I am working for a particular company, I get hurt, and now I need some benefits, and it would be awkward for me to have to sue my current employer in order to collect some benefits for my injury. So it takes out all that nastiness, so to speak, by just, okay, it's just going to be covered by the insurance policy. All right, a couple other things I'm going to point out. Question is, are employers required to provide work comp for their employees? And the general answer is yes. There are some that we'll talk in a moment about which types of employers don't have to have work comp for their employees, but generally the answer is yes. Okay, and then what about a business that doesn't have any employees? You got to get work comp insurance, and kind of the general answer to that is no, don't have to. So it says here, businesses with no employees may not be required to carry work comp insurance coverage. For example, sole proprietors and partnerships and limited liability companies in which the owners perform all the work and have no employees don't have to be covered by work comp. But in those situations, a business owner that without any other employees can get work comp on themselves, but don't have to. It gets kind of tricky though sometimes. Oh, like what if the business doesn't have any W-2 employees, but the business maybe hires other like contract workers to do, you know, certain contract work items. You know, 1099 workers as opposed to W-2 workers. We'll talk about that in a moment. How is that handled? Okay, question number 5 here. Can employees be required to pay for their own work comp insurance? No, so employers have to pay for it. They can't pass that buck on to the employee. Employers have to buy the work comp insurance for the employees.
Hey, John, we got a question asking from Sharu, is the work compensation taxable?
In other words, are the benefits taxable? Like if I'm getting what more specifically, what is the question?
It's a business expense. It's not part of your earned income.
Right. Okay. Yeah. Yeah. So if a business buys workers' compensation for the business for any employee, yeah, it's a tax deductible business expense. As far as I know, I'm not an accountant, not a CPA, so maybe I shouldn't have answered that. But as far as I know, anytime an employer pays an expense that benefits an employee, any type of insurance or benefit, from what I know, being a business owner, it's a tax deductible business expense. Did I address that question to your satisfaction? Did I understand the question correctly? Is that what the question was?
John, this is Alexis. So is the benefit to the employee, is that taxable? If they receive money from an injury at work, do the benefits they receive, is that taxable?
I believe it is not. I believe it is. If someone else is on the line and has more expertise on that, let us know. But I believe that it is not taxable. I can double check.
The laws have changed, John. It's not taxable. It's like an insurance benefit.
Yeah, I'm not aware of any insurance benefits that is taxable as income, for income tax. So we can go on.
Yeah. Yeah, that's my understanding as well. I know like disability insurance though, like if an employer provides disability insurance for an employee, disability is a totally different type of insurance policy than work comp. I believe that if an employer provides disability insurance for the employee and the employee gets benefits from the employer paid disability insurance, I think that is a taxable benefit, but any benefits under work comp, as stated, I believe is not taxable to the employee receiving them. All right, any other questions? We love questions, so keep them coming if you can think of some. And if we don't know the answer, I won't make something up. I'll put it on my list to check into it, but I'm pretty confident with the answer so far. All right, another important question is what are an employer's options for providing workers' compensation coverage in Utah? So we mentioned WCF, and I've only lived in Utah for about 21 years now, but I think at one point in time, and maybe somebody out there knows this better than I do, but I believe at one point in time, Workers' Compensation Fund of Utah was the only place you could get workers' compensation insurance. I think then over time, Workers' Compensation Fund of Utah changed into what's called a quasi-public fund, which means, kind of sort of, it was kind of controlled by the state, but technically it was a separate entity, a private entity. And now, just in the last few years, Workers' Compensation Fund has changed into a new name called WCF and is technically a mutual insurance company. It's a mutual insurance company now, and it's not really under state control. Well, it's just like other insurance companies, it's under state regulation, but technically it is not a state run company at all. It's a mutual company owned by its policyholders. And so WCF, being a mutual company, pays dividends to the customers. So Mountain CE, little business, we have a few employees and we have workers' compensation insurance, and every year we get a check, a dividend check, like, I don't know, $30, $40, yoo-hoo, get a half a bag of groceries with that. And so WCF is a mutual company, pays dividends to the policyholders. And in its charter, WCF is the insurer. I think the R is chopped off there. The insurer of last resort, as mentioned. If an employer can't get insurance elsewhere for work comp insurance takes everybody, all employers. All right, and then being a competitive state, as we mentioned, an employer can buy workers' compensation insurance from any insurance company that sells work comp, and there's many dozens and dozens of insurance companies that sell work comp in Utah. But does anybody out there have a guess as to what the market share is for WCF? Anybody know roughly what the market share is of WCF in Utah?
I'd guess 85%.
85%, that's a good guess. Any other guesses? Well, so far you're the closest guess because nobody other guesses. It's about half, about 50% roughly, within a few percent. Either way, I'm not sure. The last time I looked though, it's about 50%. So about half the employers in Utah have workers' compensation insurance from the WCF. All right, so it is possible though for an employer in Utah to self-insure. Can a mom and pop shop like Mountain CE get workers' compensation insurance by self-insuring? No, it's got to be a big company. It's got to be very strong financially. Got to apply with the state of Utah. Got to get permission to self-insure. Only big companies with lots of money can do that. All right. Other questions? Okay.
John, I have a question.
Mhm.
So since it's mandatory for the employers to carry workman's comp, does the state of Utah have a database to make sure all businesses do have a workman's comp?
Yes. Yeah. We're gonna. Is it okay if we table that, and I'll come back to that in just a moment. Yeah.
Sure.
I'll show you where you can find out. It is on my agenda to cover how you can verify. It's called verify. There is a place, a database that this Department of Labor maintains, where you can find out real quickly if a particular company carries workers' compensation insurance or not. So you're
John,
talking
I
about,
don't want to jump ahead, but I did
Yeah.
have a comment on that.
Yeah.
Depending on your industry, the type of jobs you have, there's also a different scale that is associated with the industry. So a job where it's all office workers is going to pay a much lower rate on their workman's comp than a factory where you're working around steel and hot iron and stuff like that.
Absolutely, 100% correct. And that's true also for construction workers. I teach a lot of classes to people that are studying for the insurance exam, and work comp is a big part of the insurance exam. And I use the example quite often of, like, let's say there's a construction company, and the construction company is going to maybe have some office workers that answer the phone and do the estimates, and the nice office job. And then you got the people out in the field doing the work, doing the heavy lifting, working with power tools, and climbing up high on ladders, and all that. And so in that situation, the office workers for that company are going to have a much lower rate than the construction workers for that company, and much higher rate. So absolutely true. And companies that have only office workers are going to pay very little for workers' compensation compared to like construction companies, for example, or manufacturing facilities.
Also, if you have a claim, that amount can change.
Yep. So workers' compensation uses what we call class rating to identify, the workers into classifications. And also workers' compensation also uses what's called experience rating, and employers that have a safe working history, safe job history. Very few workers have gotten hurt for that type of work are going to pay less, and compared to employers that have had lots of claims compared to other similar types of businesses. Okay, here's an important thing to know. Question: can an employer pay an injured worker's medical and disability benefits without going through workers' compensation? So, like, let's say I get hurt in the factory, and I tell my boss, hey, I got hurt, I got cut, I'm bleeding, and I think I got a broken arm. And my boss says, oh, well, okay, I'll take the doctor and I'll pay the bill for you. We don't want this to go through work comp, because if it goes through work comp, then our rates are going to go up, and we already pay a bunch for work comp insurance. We got to keep this under the table here. That's certainly illegal. So direct payment of benefits is specifically prohibited by law. But what if the office worker gets a paper cut, and needs a Band-Aid? That's there are common sense will prevail in those situations. But generally speaking, if a worker gets hurt and needs medical attention, then it's got to go through workers' compensation. It's got to be reported to the workers' compensation insurance carrier. Got to go through work comp. Okay, does that prompt any questions? All right, and then number 13 here, what are the consequences for employers that fail to obtain work comp insurance coverage? Well, penalties of at least $1,000, injunctions prohibiting continued business operations, that's not good. And then also loss of the protection of the exclusive remedy, right? So If an employer is supposed to have work comp insurance and doesn't have work comp insurance for the employees, an employee gets hurt, that employee then can sue the employer directly. And so if the employer doesn't have workers' compensation insurance, there's no other insurance they're going to pay for that. Like even if the employer has like, for example, general liability insurance, that's not going to pay. The general liability insurance, the business owner's policy, is not going to pay for workers' injuries. And so the employer can get sued. The employer is most likely going to lose big time, and the employee's attorney can go for the jugular in that situation. All right.
Talking about who is covered.
Yep.
How are owners covered on workers' comp?
Yep, we're gonna
Okay, if
go
you're gonna
through
get that. Good. Okay.
Yep, perfect, great question. It certainly applies to what we're talking about. We're going to talk about that. So, question is: are all employees required? Are all employees covered by work comp? And the answer, this from the state, is almost all employees are covered by work comp and can claim benefits. But there's a few types of workers that are excluded. Some agricultural workers, some farm workers, in other words, don't have to be covered by work comp. It depends on the size of the farming operation. But small farms, and state law is going to define how small is small. Some agricultural workers don't have to be covered by work comp. Some casual or domestic workers don't have to be covered by work comp. So, like, what I mean by that, like you hire somebody to mow your lawn, or shovel your sidewalk, or clean your pool, or you hire somebody to fix your roof, or you hire a babysitter to take care of your kids for the night or for a week or something, or like even some workers that might even live in your home don't have to be covered by work comp. So people that do stuff around your home, you don't have to provide work comp for those workers. Some real estate and insurance brokers, it says, don't have to be covered by work comp. Why? I suppose maybe because there's maybe lots of legislators that are in the real estate industry, insurance industry. So that's an important thing to remember as far as how that works. And then some sole proprietors, partners of partnership, and members of a limited liability company don't have to be covered by work comp either. So while these types of workers are not automatically covered by work comp, their companies can elect to provide coverage for them. Okay. Now are corporate officers and directors covered by work comp? And in other words, like the owner of an LLC, for example, or it could be an S corp, could be a C corp. So are corporate officers covered? Yes. However, a corporation can choose to exclude some or all of its officers or directors from coverage. To exclude officers or directors, a corporation must first notify its workers' compensation insurance carrier. So in that situation, like maybe there's 5 employees and there's 2 owners plus 5 other employees. And so the 2 owners of that corporation could decide to not be covered. They have a workers' compensation insurance carrier to cover the 5 other employees. And so in that situation, the owners of the company can just notify the workers' compensation carrier and say, we don't want coverage for the owners. And so they can save money by not covering the owners. So small corporations that do not have a workers' compensation insurer, like maybe there's just 1 or 2 owners of the company, and they don't want to have to be covered. They don't want to be covered. They can apply for an exclusion to the Industrial Accidents Division. So that's an exclusion that the company can apply for. If they don't have any other workers that need workers' compensation coverage, and if the owners don't want to be covered, they could get excluded. And I think it's up to 5. I think I saw it somewhere in here, up to 5 owners. If there's not more than 5 owners, all 5 of them could be excluded. All right, any questions there so far? Okay, then what's the status of independent contractors? So, another way of describing that is a 1099 worker. And sometimes it gets kind of tricky as to what's a 1099 worker, what's a W-2 worker. And generally speaking, if a business hires somebody to do some work, like maybe build a website or something, or do IT work or something like that, kind of like some of the things to ask about is the one that's doing the hiring, is the one who's doing the hiring telling the one who's being hired how to do the work, and is supplying the equipment and tools for that person to do the work. So like, so let's say a business hires a programmer to build a website. The programmer probably has their own computer, their own tools of the trade, and the one who's doing the hiring is not telling the computer programmer, the website developer, how to do the work, how to do the programming, how to do the work, or when to do the work. So in that situation, that worker would most likely be considered a contract worker, a 1099 worker. So again, some things are when is the work, if the employer, we'll just say the employer telling the contract worker when to do the work, how to do work, and which tools to use. Here's the tools to use. Those are some things, some factors, whether it's an independent contractor or not. So in order to qualify as an independent contractor, a business must be independent in its work and not subject to control and direction of some other entity. And independent contractors are treated the same way as any other business. If it has employees, it is required to obtain workers' compensation coverage. But if the independent contractor does not have any employees, just like we talked about earlier, it itself might be eligible for a workers' compensation coverage waiver. So if your business hires somebody to do some work, and that person is a independent contractor, doesn't have any other employees, probably doesn't have work comp insurance, and so your business needs to provide work comp insurance for that that person, that independent contractor, unless that contractor can prove they have work comp insurance or have received a waiver. All right, so that's kind of tricky, and I think this addresses the question that was asked earlier. So if your business hires an independent contractor, a 1099 worker, you got to have work comp insurance for that employee, unless that 1099 worker, unless they have work comp insurance. If they can prove that they have work comp insurance, your work comp insurance don't have to cover that person. Or if they've given you a waiver, the proof that they have waived their right to be covered by work comp. All right, kind of tricky, so I spent more time on that. Does that answer the question that was asked earlier about contract workers?
Yeah, that's good. Yeah.
All right, let me know if anybody has any questions on that part. Okay, another question. What is a statutory employer? Statutory. So statutory means, I believe it means state law. So in other words, an employer defined by state law. So if an employer hires a contractor, Utah law expects the employer to verify that the contractors have complied with workers' compensation coverage requirements. So in this case here, the employer is a statutory employer because, by state law, that business is an employer because they've hired contract workers. Even though not a W-2 worker, they've hired contract workers. That employer is considered a statutory employer. So if the hiring employer fails to verify coverage and the contractor does not have insurance, Utah law treats the hiring employer as the statutory employer of the uninsured contractor's employees, and then the hiring employer is then liable for the employees' workers' compensation benefits. So that's just reiterating what we just said a few moments ago, just in a different way. So as an example, our little company, Mountain CE, we have a few W-2 workers, and we have some 1099 workers. And so some of the 1099 workers they have a very, very small business. They don't have workers' compensation insurance. We haven't made them sign a waiver. So our workers' compensation policy does cover those 1099 workers. So it's not, they don't have to have work comp on their own. They don't have to waive their coverage. We've decided to just cover them under our policy. It's, it doesn't cost very much for our policy to cover them. All right, because the premium is based on payroll, and their payroll isn't very much. So it doesn't cost very much to add them under our policy. All right, any questions so far? All right, so we mentioned this about the waiver. So a waiver is a certification by the state that the waiver holder has no employees, has provided evidence that it is an independent established business. The waiver holder can present the waiver as proof of compliance with workers' compensation requirements, and the requirements and process to obtain the waiver can be found at the Labor Commission's website. So a small business, no employees, just owners that do all the work, don't have to be covered by work comp, but they have a choice. They can either buy work comp or they can get the waiver. All right. Let me know if you got any questions there. Just a couple. So I think that does it for this resource here on the state. All right. So now I want to go back out to the state website. Because we did have a question about how you can see if a company has work comp insurance or not. Let me get to the right spot. Okay. One moment while I get there. All right, here it is. So again, this is the Utah Labor Commission website, and there's a handy dandy tool right here on the homepage called Workers' Compensation Coverage Verification. So if I click on that and accept the terms of use, I'll make it bigger. So you can come out here and you can Google, or not Google, but you can search by employer name, by their federal employer identification number or address. I'll just do it by our little company, Mountain CE. You can do contains or starts with. Oh, I hate these things. Bicycles, help me find out where all the bicycles are. Is that part of the bicycle or not? Well, maybe a little bit. All right, hopefully I got them all. Ugh. Bicycles. Well, right there. There's a shadow of a bicycle. Does that count? All right, I guess I passed. So I just put in Mountain CE and it comes up with Mountain CE LLC. Here's our address. Here's our policy number. If I click on it, it tells that we have insurance coverage through WCF, Mutual Insurance Company. And it says that today, as of today, we do have a valid policy. So that help with verification? Did that answer all your questions with the verification?
Yes, thank
Yeah.
you, John.
All right, so very quick, simple, easy tool. It's public information, which employers have work comp and which employers don't have work comp. It's kind of a handy dandy tool. All righty. All right. So if you we're going to keep going here, but if you do need to take 2 or 3 minutes, this would be a good time to do that. But we're going to keep plowing ahead. It's kind of like a halftime break here. Any questions that you can think of? Anything that you're wondering about so far with workers' compensation? We got more to come. All right, let's go back and just do a little review of some things that we talked about earlier. We did talk about self-insured. Oh, yeah, am I sharing my screen? Is that showing up?
Yes, it is.
Okay, good. All right, so we talked earlier about self-insured employers, that it is possible to self-insure if the company's big enough. So it's just, you got to fill out an application. The business would have to fill out an application. Got to have been in business for 5 years at least continuously prior to the application. Got to certify a bunch of things, a proof of a acceptable financial statement. Got to have a surety bond of a minimum of $100,000 issued by a corporate surety authorized to transact such business. So even the employers that are self-insured have to at least have a bond. Don't have to have an insurance policy with an insurance company, but at least have to have a bond with a surety to verify that they can take care of injured workers. All right, here's a couple of quiz questions on some of the things that we talked about. You never know which questions you're going to get on after the class. There'll be 3 questions that you need to answer to get credit. Which of the following is true regarding workers' compensation in Utah? You can answer 1, 2, 3, or 4 in the meeting chat. Number 1, Utah has elective laws and competitive. Utah has compulsory and is monopolistic. Utah has compulsory laws and competitive. Utah has elective laws and monopolistic. 1, 2, 3, or 4. All right. Let's see. Oops. Oh, where'd it go? All right, everybody able to answer? What's the consensus? I lost my chat area.
Number 3.
Number 3. That's the winner chicken dinner. Number 3 is the answer. So remember, Utah has compulsory laws and is a competitive market state. Compulsory means that there are maybe some exceptions, but by and large, almost all employers have to buy work comp for their employees, and is competitive, meaning that you can buy it from any work comp company that sells it. Which of the following statements is not true about WCF? So I have here Workers' Compensation Fund, but technically it is now called WCF. Let's see, number one, Utah employers that are high risk and unable to obtain insurance from other carriers can purchase work comp insurance from Workers' Compensation Fund. That is certainly true. Number two, it's owned by the state of Utah. No. So remember, WCF is not a state-owned entity. I think a long, long time ago it was, but no longer. It's a mutual company now. Number three, it's the insurer of last resort. Yep. And number four, per state law, is required to write all workers' compensation insurance for which application is made. And so anybody who applies for work comp with a Workers' Compensation Fund is entitled to be approved. So number two is false. That's the right answer. Instead of buying work comp insurance, if an employer wishes to self-insure, it must do what? 1, 2, 3, or 4. I'll give you a moment to answer. Oops. All right, so number one, provide a letter to the state stating its intent to pay for workers' injuries. Let's see. Number two, follow the self-insurance guidelines established by the federal government. Well, no, work comp insurance is regulated by the state, not the federal government. So number two is out. Get approval from the National Association of Insurance Commissioners. No. Provide a surety bond to the state of Utah. Yeah, that would be the best answer. So number one, just letting the state know, yeah, we'll pay for it out of our own pocket. That's no, got to be more formal application than that. Number four, which of the following is not true regarding states that have compulsory laws like Utah? So there's the three things that are true. Let's look for the three things that are true. These laws generally require that employers obtain work comp insurance for nearly all workers. That's true with compulsory laws like Utah laws. Number two, states with such laws do not allow employers to obtain permission through self-insurance. That's false. So I'm pretty sure that's going to be the right answer because we're looking for the one that's not true. Number three, compulsory laws say that these laws require employers to accept responsibility. That's true. And how do we make them accept responsibility? By making them the employers buy work comp insurance. And last one, only one state in the United States does not have work comp laws. I believe that's true. Number two is the false one. Okay. Which of the following is not true? I think the first one is true about Texas. Number two, in the state with elective laws, common law defenses are often used by employers to avoid being sued. That one is not true, I believe. Let's look at the other ones. In the state with elective laws, an employer can be sued if it's found to be at fault. Yeah. And number three, number four, in the state with elective laws, each employer has a right to choose whether or not they participate in work comp. Yeah, that's true. So elective laws means get to choose. But number two, again, is the false one. Let's talk more about what that means. So it's mentioning here common law defense arguments. So common law defense arguments would be something like assumption of risk. And that's what these are, the common law defenses were things that were used before there was workers' compensation in America. The big companies, the big employers had attorneys to argue these common law defenses, like, sorry, John, you got hurt in the factory, but when you took this job, you knew the risk. You even signed the waiver. You assumed the risk. You knew you could get hurt. You got hurt. Too bad, too sad. You can't do anything to us because you signed the waiver. That was something that could be used prior to work comp laws. Another example is a fellow servant rule, like, sorry you got hurt in the factory, John, but it's not our fault, not the employer's fault you got hurt. It was your fellow worker. Your fellow worker didn't properly train you. It's your fellow worker's fault, not your employer's fault. Things like that. Those are common law defenses. And so in Texas, if an employer doesn't buy work comp insurance, the employee can sue the employer for workplace injury, and the employer is not allowed to use those so-called common law defenses. Another common law defense I just thought about is contributory negligence. Sorry you got hurt in the factory, John, but you didn't do the job right. You pushed the wrong button on the machine. That's why your arm got cut off. Too bad, too sad. It's your fault. Employer shouldn't have to pay for your injury because it was your fault. So with the way it works in Utah and most states, employers cannot use those common law defenses anymore. Any questions on that? Any questions on that? So, as long as a worker is working, the employer is defenseless for work comp claims, so to speak. But sometimes it comes into question, was the worker really working? And the term that's used for this that comes up sometimes is the term horseplay. If workers are goofing off at work and somebody gets hurt, that's not covered by work comp. If the workers are goofing off, throwing footballs around the office or running around, goofing around, then it could be proved that there was horseplay when the injured person might not be able to be covered by work comp. Or if there were drugs and alcohol abuse involved, and somebody was intoxicated at work and got hurt, that might be a reason also for work comp not to pay. All right, does anybody have any real life things that they'd like to share? Maybe things that happened to you on the job, or a coworker happened at job? You don't certainly have to share anything if it's personal, you don't want to share, but sometimes when I teach these classes, people are eager to share their experiences with work comp or what they've heard about work comp. Anybody want to share? Well, maybe that's good. Maybe that's good. If you got no stories to share, because then there's maybe nothing bad happened.
We're just all really shy.
Yeah, I know. I understand. I am too. All right, very good. One time I was, this is, just to kind of illustrate the point, I was teaching class a few months ago, and a woman in class said that her husband got hurt at work. And the husband said, hey, it's the employer's fault. The employer was negligent here for my injury, so the husband of this woman approached an attorney and said, hey, I got hurt at work. I want to sue the employer. And the attorney said, sorry. After asking a few questions, the attorney said, sorry, I'm not going to be able to take your case because, this isn't going to work. You got hurt at work. Work comp is going to take care of this. The employer is covered by work comp. You're going to be covered by work comp. And we're not going to be able to sue the employer. This won't work. All right, let's just do maybe one or two more here. Which following statements is not true? Number one, in Utah, an employer that needs work comp insurance can purchase it from any private insurer that sells it. Yeah, that seems true. Number two, some agricultural workers and some casual domestic workers do not need to be covered by work comp. That's true. Number three, all businesses must purchase work comp and there's no exceptions. That's false. One more. If an employer wishes to self-insure, it must do all the following except fill out the application. Yep. Demonstrate it's been in business for at least 5 years. Yep. Apply for a waiver and prove it as a financial hardship. No, the opposite is true. It has to demonstrate sufficient financial strength and liquidity, and which includes providing a surety bond, a minimum of $100,000. So financial hardship is not a reason for self-insuring. Alrighty. Okay, now we're going to jump into the next portion here, which is benefits. The benefits. So just to give you a heads up on the timing, so we have up until 12 o'clock blocked off, but since we're not taking a break, an official break, we have to have got to have 50 minutes per credit. So we're going to finish up at about somewhere between 11:45 and 11:50, just to let you know when we're going to end up. About 35 minutes from now or so. And that will satisfy the state requirements for the 2 CE credits. All right, so we need to distinguish when it comes to benefits, under which situations will benefits be paid. We got to distinguish between accident, disease, and so we know what an accident is, something that's sudden, unexpected, that causes injury. That, of course, is an accident, and workers' compensation will pay for workplace accidents regardless of fault. But also, workers' compensation isn't limited to just accidents, it also pays for what's called occupational disease. Can you think of some? Can you think of some occupational disease?
Black lung.
Okay, coal miners with getting lung disease, okay. That would certainly be one classic example. Can you think of others, anybody?
How about asbestos
That's in the
poisoning?
chat.
Asbestos.
Asbestos exposure in the chat as well.
Yeah, you can put your answers in the chat. I'm not able to see the chat for some reason at the moment. Wonder if it's hiding behind something else.
Well, just know that anytime you ask a question, they all put which one they think it is. So
Okay, good. Awesome. All right. Yeah, so yeah, like asbestos, working in an asbestos factory, or like a construction worker that comes in contact with asbestos and gets lung disease from that, that certainly would be occupational disease. But even like a hospital worker, maybe a nurse, a doctor, somebody gets poked by a needle and gets an infection, that could certainly be considered an occupational disease. It could be pinpointed directly to the needle poke. What if like a hospital worker gets COVID and is certain got it from work? Because there was last week or a couple weeks ago, there was a patient that I treated with COVID, and now I got COVID. Would that be an occupational disease, do you think? What you all thinking about that? Would COVID or getting the flu? Or
I would say no, because that's a communicable disease.
right. So generally speaking, yeah, anything that's communicable or could be get a disease anywhere, like how are you going to prove it? It's impossible to prove that got it through work. So yeah, COVID, the flu, or any other so-called communicable disease would not be considered an occupational disease and not covered by work comp.
I had a friend that was a nurse. She died of AIDS from one of her patients.
Oh, wow. That's horrible. Yeah. So yeah, certainly those horrible things can happen. So the state's definition of occupational disease is any disease or illness that arises out of and in the course of employment and is medically caused or aggravated by that employment. All right, now let's take a look at what is covered by work comp. State law says that there's 4 main benefits provided by work comp policy. It's going to take care of medical care, like doctor bills, hospital bills, and so on. It takes care of rehabilitation after an employee's been hurt or has an occupational disease and needs rehabilitation, like physical therapy, for example, or maybe even occupational therapy to get back to be able to do the job. Work comp can pay for that. Work comp also pays for disability income, also known as loss of wages. Another name for it that we see is indemnification, is another name for loss of wages or disability income. And the formulas that are used to determine how much is complicated. But generally, and there's going to be a minimum, there's going to be a maximum that will be paid out. But generally, about, or I should say, quite often, the number is 66 2/3. 66 2/3. In other words, 66 2/3 is 2/3 of the person's income. If it's, person is totally unable to work comp will often pay 2/3, also known as 66 2/3% of the person's lost wages. And also it pays death and survivor benefit as well. If a worker dies due to a work-related injury or illness. So that's what work comp pays for. Work comp does not pay for pain and suffering. And so let's talk about that pain and suffering. So like, let's say let's forget about work comp, or let's say I'm not talking about work comp now, but let's say I get hurt in a car accident. And it's not work related, remember. I get hurt in a car accident and I hire an attorney, and I'm going to be able to sue, hold responsible the negligent party for my medical bills, my rehabilitation, my loss of income, and so on. And also, if it's a car accident and not work related, I'm going to be able to go after the other person for my pain, my suffering. So that would be like car accidents or things that happen, or if my dog bites somebody, if I had a dog, my dog bites somebody, yeah, I can. Or I'm sorry, if I get bit by a dog, then I can go after that person's for pain and suffering. But not with work comp does not pay for pain and suffering. So if I get hurt in the factory, yeah, I can get my medical bills paid for, my rehabilitation, my loss of income, but I'm not going to be able to get any money out of work comp for my pain, my suffering, my backache, my headache, I can't sleep at night, and so on. Not covered by work comp. Work comp does not pay for any punitive damages. What do I mean by punitive damages? Like maybe the employer had an unsafe working condition, and that led to the worker's injuries. Maybe the employer is going to maybe be able to be sued in that situation for having an unsafe working condition. And in that situation, work comp will not pay for any punishment they receive. So the employer would be on their own if they're punished legally for any unsafe working condition. Work comp won't pay for it. And also, work comp does not pay for any prevention or preventive care, like safety or anything like that. Even though a lot of work comp companies will provide voluntarily, they'll provide safety programs for the employers to have safe working environments. Technically, that's not part of the work comp benefits. All right. Now, let's go into more details about medical care. The policy will pay for necessary and reasonable medical care that results from bodily injury by accident that occurs during the policy period. as well as bodily injury by occupational disease that we talked about, which is caused or aggravated by conditions by the employment, conditions of employment. So work comp policy does not specify a dollar limit. We mentioned this earlier for how much can be paid by medical care. It just says whatever is reasonable to treat the injury or disease defined by state law. And more specifically, it'll pay for doctor bills, hospital bills, chiropractic care, dental care, prescription medications, prosthetic devices, surgical care, durable medical equipment. It can also pay for travel costs to receive medical treatment. Work comp will pay for rehabilitation so that the worker can get back to working. It'll pay physical therapy, psychological therapy, occupational therapy. It can pay for evaluation of physical and mental abilities and career counseling, training to regain the skills needed to return to work, vocational training to learn new job skills, and travel costs to and from rehabilitation facilities. Another big part is the disability income compensation. And 2/3, also known as 66 2/3%, can be paid. But that is subject to minimums and maximum amounts. So if I'm getting paid $10 million a year and get hurt by work comp, will I get 2/3 of $10 million? No, there's going to be a cap. All right, so and for a temporary total disability, the amount cannot exceed 100% of the state average weekly wage at the time of the injury. And for permanent disability, permanent total disability, the amount cannot exceed 85% of the state average weekly wage at the time of the injury. All right, so we should be aware of disability definitions. A disability can vary by how long it can expect to last. Some disabilities are temporary. Some disabilities are going to last forever. That's called permanent. A disability can vary by how bad it is. So if a worker gets hurt, can still do some work, that's considered a partial disability. If a worker suffers an injury that leaves that person unable to work at all, that's considered total disability. And so now we can mix and match those variables, and there's 4 different disability definitions defined by state law. One is temporary partial, like I get hurt, I'm a factory worker, I get hurt, and now I can still work, but I'm put on light duty. And generally speaking, if I'm able to do light duty work, and if light duty work is available, I must do the light duty work. And so I can get compensated for my loss of income because now I'm on light duty, I'm getting paid less. I can get reimbursed for some of my loss of income because now I'm doing light duty work, which pays less. Also, temporary total would be like I fall off a ladder, I bust both of my legs, both of my legs are broke, I can't work because I have 2 broken legs. Eventually, I'll be able to get back to going to work, but while I'm in the hospital with 2 broken legs, well, I can't get around at all. I'm considered totally disabled, but it's going to expect to last only a temporary period of time. That's temporary total. Permanent partial is often related to a loss of a limb. So if I lose an arm, and now I'm not going to be able to get paid as much because I can't do the same work as I was doing before, that's considered a permanent partial disability. I can still work, but not getting paid as much. But loss of a limb means permanent. I'm never going to be able to get my arm back. So it's permanent. Permanent total is the worst kind. That would be like I suffer permanent brain damage, injury, and I'll never, ever be able to work again. All right. Any questions on the different disability definitions? So State law defines that, if a person has one of these categories of disability, then, here's the benefits for that situation. The benefits are different based upon the category of the disability. Okay, when it comes to disability and how much will be paid for loss of income due to a disability under work comp, there's a thing called an impairment rating. Impairment rating is provided by a physician, a doctor who has evaluated the person who got hurt. So the impairment rating is a number between 0 and 100. A lower number means less impairment, and a higher number means more impairment. So the work comp insurance company is going to rely on the impairment rating provided by a doctor who has seen the person to determine how much will be paid. So the higher the number, the more that work comp will pay out. All right. Then if a worker dies due to a work-related accident or illness, then the work comp policy can provide up to $9,000 for funeral burial expenses. And then also it can pay for survivor benefits to the deceased worker's spouse, dependent children. And so the survivor benefit is calculated. It's typically 66 2/3 of the weekly wage at the time of the injury, plus $20 for the dependent spouse, and for each dependent child under 18, up to a maximum of $100. So it pays 2/3 typically of the deceased worker's injury wage at the time of the injury, plus extra amount, depending upon the number of members of the household. All right, survivor benefits are normally going to end for surviving spouse upon remarriage. For dependent child, the benefits end upon the child reaching age 18 or graduating from high school, whichever comes later. Okay, let's go through a few quiz questions. All right, Sophia was in an accident at work, lost the use of one leg. Although she can work now, she will never be able to earn as much as she did before the injury. This is what type of disability? 1, 2, 3, or 4. 1 is temporary partial, 2 is permanent total, 3 is temporary total, 4 is permanent partial. 1, 2, 3, or 4.
Everyone in the chat is saying 4.
All right,
far.
thank you. Oops, I pushed the wrong button. There we go. Number 4. Yep. So yeah, it's definitely going to be permanent partial. So she can still work, but she's not getting paid as much as she was before, but she lost a limb. And now that's a permanent situation, permanent partial, of course. And then state law will dictate how much will be paid for that situation due to the permanent partial disability. Workers' comp can pay for which of the following? Number 1, pain and suffering. 2, punitive damages. 3, preventive care. 4, rehabilitation. 1, 2, 3, or 4.
Looks like everyone is saying 4 again this time.
All right, sharp group. Yep, rehabilitation. So there's 4 main benefits, and they're listed over here on the left. There's the medical care, the rehabilitation, the disability income, and the death and survivor. So the things that start with a P, like pain, suffering, punitive damages, preventive care, not covered by work comp. What's another term for disability income? 1, 2, 3, or 4. And the answer is
Majority are saying 2.
2. Loss of wages. That one's so easy. I'm thinking even I could have gotten that one right. Yep, loss of wages is also known as disability income. Sometimes it's called indemnity or indemnification. All right, number 4, Alex fell off a ladder at work, broke both legs and his hip, could not work for several months while he's recovering. Eventually is returned to the job he had before the injury occurred. This is known as what type of disability? All right, so guessing that you all got it right. So it's not permanent total because eventually he was going to be able to get back to work. That's not temporary partial because he can't work at all right now. Temporary total, nope. It's going to be permanent, no, temporary total, sorry. Or for a short time, a few months maybe, can't work at all. Temporary total. While Russell was working at the beach, a coconut fell down from a tree, struck Russell in the head, left him with a tragic brain injury. Russell will never be able to work again. This is considered to be which type of disability? Never ever be able to work again. And as I'm sure you're all saying, that's a permanent total disability. Have you ever gone to one of those warm places like Hawaii or Mexico on the beach, and you look up and you see those coconuts? You're like walking along the beach, and you wonder like what would happen if one of those things fell down. I know when we were in Hawaii last time, I saw that. Like what the, that's kind of a hazard. That seems like a dangerous thing. You got people walking under, one of those things let loose, that would be dangerous. And then I think the last day we're there, we saw a bunch of workers up there cutting them down. So I didn't tell anybody, but maybe they got some kind of subliminal message that I was thinking about that. Which of the following is an example of a death, in other words, survivor benefit that must be included in work comp policies? So number 1, I don't think number 1 is a real thing. Number 2, weekly income for spouse and children. Number 3, lump sum of money. No, they don't get a lump sum of money. So 3 and 4 are out. So of course, the weekly income to the spouse and the children of the worker who has died, yep, that will be paid by work comp. What term is used to describe any illness, disease or illness that arises out of in the course of employment and is medically caused or aggravated by that employment?
Most people are saying 1 on this one.
Uno, occupational disease, of course, is what that's called. Good. And we're going to just do one more. What is the dollar limit specified in work comp policy for a workplace injury? Everybody remember the dollar limit? If you don't remember the dollar limit, you're in trouble. No, just kidding. Because remember, there is no limit specified in the policy. Some of you might go, what? I didn't think there was a limit. And you're correct. There's no limit specified in the policy. It just says the policy is going to pay what work comp says needs to be paid. All right. we'll call her good there. And here's a review question going to pop up here. What are the 4 main benefits provided by work comp to employees who suffer a work-related injury or illness? One of the more important questions that we need to know. All right, so the consensus is which one? Everybody getting it?
Everyone's saying 1.
1. Yep. Medical care, rehabilitation, disability income, death, and survivor. Those are the 4 things paid for by work comp. Very, very important question. All right, now we're going to talk about the policy parts. We'll talk about the information page, part 1, work comp, part 2, employer's liability, part 3, other states, 4, duty of injury occurs, 5, premium audit, 6, conditions. So we're going to spend most of our time on part 1 and the rest of our time on part 1 and part 2. I'll just briefly mention the other parts here. So, you know, work comp policies have what's called an information page. It's the same thing, really. It serves the same purpose as a policy declaration page. So if you look at your auto policy or your homeowner's policy, your renter's policy, whatever you got, any property and casualty insurance policy, it's going to have a declaration page, also known as a deck page, that's going to tell you the most important things you need to know about the policy. So work comp policies don't have a declaration page. Instead, they have an information page, which has the most important things like who's insured, when does the policy period start, when does it end, what's the name of the insurance company that provides the coverage. The most important things are going to be on the information page. Part 3, other states, that is if the, so like if you got employees, if the business has employees in a particular state, then that live in a certain state, then you need workers' compensation for the employees that work in that state. There is some temporary coverage. I believe it's 6 months. So like if there's an employee that works temporarily in another state, it'll be covered under that state's work comp policy, that employer's work comp policy for that particular state up to 6 months. But if an employer has people working in other states, they can be for longer than 6 months, they can be covered under that policy without having to get a policy in that other state if that other state is identified in the other state's portion of the policy. All right, so that's part 3, other states. Duties of injury occurs. That just simply means that the employer is required by law to get medical attention for the employee if an employee gets hurt. If it's a minor thing, that just first aid, then don't have to be covered under work comp, don't have to go to the doctor. First aid, just need a Band-Aid for a paper cut, for example, that doesn't have to go through work comp. But otherwise, the employer has duties if injury occurs, get the proper medical attention. That's number 1, and then also report it to work comp. We'll talk about how the premium is calculated in just a moment, and then conditions are the rules, and just like any insurance policy, there's rules to follow. Those are the conditions, the rules. Okay, now let's talk about part. Okay, let's go to part 1, work comp. So if I look in part 1 here. So part 1 of work comp policy provides the benefits required by state law. They're the same ones that we just got done talking about. There's the medical care, the rehabilitation, disability income, also known as lost wages, and also death and survivor. And part 1 also includes this thing known as the defense, duty to defend. So you might say, well, why does work comp need a duty to defend in the policy when the employer can't get sued? What's there to defend? And well, it's possible. it's possible for an employer to maybe somebody hires an attorney and the attorneys think so, they got some kind of angle to go after. And so if an employer in a rare situation does get sued, the policy does provide the defense. In other words, the employer's insurance company must have attorneys trying to reach a settlement, maybe trying to get it thrown out, try to come to a settlement of some sort, or try to get it thrown out. So even though typically the employer can't get sued, there is the duty to defend nonetheless. Okay, this is an interesting one. So all work comp policies that I've ever seen have two main parts. The part one is called, as we just got done talking about, part one is work comp. It provides the benefits required by state law. But part two, employer's liability, I think of it as there just in case. Just in case the employer could get sued for a workplace injury. Doesn't happen very often, but if it does happen, there's coverage in the work comp policy called Part 2 employer's liability. Okay, so we've talked about the fact that workers' compensation is considered to be exclusive remedy. It means that the employer can't get sued for workplace injury by the employee, but there are some rare situations where an employer could get sued. And so if we look in a work comp policy, part 2, it would show these things. I'm going to talk about the second one and the third one here because they're the easiest ones for me to explain. Selfish reasons. So number 2, it says here is loss of consortium is something that's covered under part 2 employer's liability. So for example, let's suppose that before I got hurt in the factory, I was kind of a okay guy. I pretty much, I'm grumpy sometimes, but for the most part, I was nice to my family and nice to my wife and my kids and my grandchildren and my friends and family. I was, nice most of the time. After I got hurt in the factory, because I got a bad head injury in the factory, I've turned into a monster. I'm really mean to my family. And so my family maybe can sue my employer for what's called loss of consortium, loss of love and affection, because this injury turned me into a monster. Maybe that'll work. And if so, employer's liability will pay. Another example is consequential bodily injury to a family member due to the employee's injuries. So let's suppose that I get hurt in the factory. My wife gets a call from my boss or somebody at the factory and says, John is hurt, John's dead. John got hurt at work, he's gone. And upon hearing the news, I'm thinking my wife would probably be a little upset. Maybe she suffers a heart attack upon hearing the news that I got hurt really bad or I died in a work accident. And so there's an example of where my wife got hurt because I got hurt. She suffers a heart attack. So that's known as consequential bodily injury to a family member due to employee's injury. So these are some examples that could potentially be covered under Part 2 employer's liability. Almost all the claims under work comp policy are paid by Part 1. Part 2 employer's liability is there just in case it's needed. Okay, now we're going to jump over to a premium example. So we'll be wrapping up here in about within the next 5 minutes. All right, so here's an example of how work comp insurance premiums policies the premiums are calculated. So here's an example. Let's say there's an office, let's say there's a construction company. And in this construction company, there's 2 different kinds of workers. There's some office workers and there's some construction workers. So all the office workers are put into a classification and there's going to be a rate. The work comp insurance company is going to have a predetermined rate and it's going to change each year probably. They'll have a rate for that type of worker. Maybe I'm just making up numbers here. Let's say the office worker, the rate is 0.5. And then we take that rate for that type of worker, known as a class rate, and multiply it by the annual payroll for all the office workers that work for that company. The estimated payroll for all the office workers that work for that company annually. And so we do the math here, 0.5 times 100,000 divided by 100, because that rate, 0.5, is a rate per $100 of payroll. And to come up with a premium, $500. We do the same thing for the other types of workers in that company. And, there's some construction workers that are going to maybe have a considerably higher rate, because construction workers have a higher chance of getting hurt. We take the rate for construction workers, $4 per $100 of payroll it is. We'll multiply it, by the annual payroll for all the construction workers per year, and divide by 100, because the rate in this example 4 is per 100, to come up with a premium of $8,000. We add up all the premium for all the different kinds of workers. And in this example, $8,500. Multiply that number by the employer's experience modification factor. That's so there's an organization out there, I think it's called the NAII, National. Anyway, there's an organization out there that keeps track of all employers in America, their loss history, whether they have a good safety record or a bad safety record as far as work comp claims go. So so 1 is a neutral number. It's not good, it's not bad. So if this employer has a factor less than 1, then they're going to get a break on their work comp insurance. But in this example, the factor is more than 1. So this example, this construction company has a higher than average claim history compared to similar other construction companies. So we take the 8,500 multiplied by the 1.1 to come up with 9,350. So this is the estimated payroll at the beginning of the policy year. It's estimated. And let's suppose that this construction pays the 9,350 at the beginning of the year. At the end of the year, an audit's going to be done. The insurer is going to contact the employer, the insured, and say, okay, now that the policy period has ended, what was your actual payroll for the year that just ended? Not for the upcoming year, but for the period that just ended, what was your actual payroll? And so this construction company had more payroll than what was anticipated. Maybe they, business was booming. They had to hire more workers. They had to maybe pay overtime, and their payroll was more than estimated at the beginning of the year. We redo the math, redo all the calculations. And so because there was more payroll than was estimated at the beginning, then the premium comes up to $11,825 in this example. And then just do the math. The final premium, $11,825 minus the estimated premium of $9,350. This employer is going to owe $2,475, $2,475 more at the end of the year due to the audit. All right. What questions do you have there? I'm just going to show you one more thing, but I would be happy to entertain questions as well. Before I forget, here we go. What are the 3 main factors that determine the premium of a workers' compensation policy? One of those important questions I'd recommend knowing. What are the 3 main factors? Age of business, experience of the business owner, annual gross sales? No, that's not a good one. Years in business, age of the workers, the location? No, that's not a good answer. The best answer, of course, is going to be class rate. Each type of worker is put into a classification. We take that class rate, multiply it by the payroll, the annual payroll of the types of the workers, annual estimated payroll. Experience, remember the experience modification factor. An employer is rewarded for low claims history. Employer is penalized for high claim history. And so those are the three main factors: class rate, the rate for that type of worker, the annual payroll, and the employer's loss experience, loss history. All right, any questions there? Anything in the chat? Oops, just want to leave you with one thing. So here's an example of a workers' compensation policy. Here's the information page. It's kind of the equivalent of the deck page. It's going to have the named insured, the name of the insurance company. And remember, it doesn't, it says here, coverage, under, I'll make it bigger because otherwise we might not be able to see it. It says, what's the coverage for part 1 of a work comp policy? It just says it pays whatever state law says. So there's very little details in the policy of what kind of coverage there is. It just says we pay what state law says we have to pay. And then, but there is also the part 2 that hardly ever pays a claim that I mentioned. There are limits. There are limits of liability for the part 2, but no limits in the policy for the part 1. All right, we'll wrap her up there.
We do have a
Go ahead.
in the chat. So does WCF take into consideration any occupation versus own occupation when it comes to defining disability?
Yeah, great question. I think I can give you my thought on that. I think that work comp uses like a strict definition of disability, so it's hard to qualify, I think, for benefits under work comp. I'll do a little bit of more research on that, but I think so I'm familiar with the concept of own occupation, any occupation, and in order to be eligible for work comp benefits under an own occupation policy, you got to be unable to do your own occupation. So if I'm an airplane pilot and I can't do my own occupation, fly airplanes, then the policy is going to pay a benefit. And so it's easier to qualify under own occupation than it is under any occupation, of course. And I'm sure most of you already know that. But I'll find out. I'll do a little research. Who should I email the answer to? Nancy is okay if I email it to you, or who should we email the answer to?
That's fine, and I'll send it to him.
All right, I'll send it to Nancy. The answer on, I think it's, I think the work comp is, it depends on the situation. Every situation is unique and different, but generally speaking, I think it is, if a person is able to do something, but maybe they're going to be getting paid less than they were getting paid before, then they'll still get some benefits, but not as much. So I think it's more leans towards the any occupation, but I'll confirm that. Appreciate the question. Any other thoughts or questions? All right. I'll stick around in case there are, but otherwise, Doug or Nancy, anyone have any thoughts or questions, or anything for the crew?
Thank you.
We're just really glad you came, John.